Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we had quite the last 90 minutes of trade today. Markets were under a lot of pressure. There's a lot to talk about tonight. The title of this, when you see the rebroadcast, is going to be Mass Liquidation. I'll explain that. It's amazing what can happen in 90 minutes. And so there's a fair amount to cover just looking back at yesterday and looking back over the last couple of days. A lot of things didn't seem to make sense. I'm going to do my best to try together at least try to tie together what I think is coming as we go forward, but actually what's been going on for the last several days. And I believe it all starts off with Afghanistan, actually. Maybe that didn't seem like there was much of an impact, but I think there really was. I think there was a psychological impact on a lot of thoughts across the world. I have talked to some friends of mine overseas, both in Asia and in Europe, over the last couple days, and everybody's a little rattled by that event. And a lot of folks, a couple that I spoke to anyway, are concerned about the potential of things happening in Taiwan and other things going on, primarily with Chinese interests. And it's very interesting from that viewpoint. But I think that just kind of set the tone for as we came into what we really saw today, which was the reaction after the Fed. And I'll get into all these details here in a minute. But we saw the S&P down the most today, and it's been the leader, down 1.07. The NASDAQ down 0.89 and the Russell down 0.84. So it felt really big, but there was only an hour's worth of trading, and we're trading slightly higher in the futures. I'll show you in a minute right now. So it's not like there's a full-out collapse happening, but there is some things that are getting shifted around, especially on the short-term basis. And as we go forward in the next couple of days, after tomorrow night's video, and we come into the end of the week, should be interesting, as I'll have some more time to do some analysis. But think about what's happened over the last couple of days. We've had retail sales come in minus 1.1%. We saw a huge miss in the housing starts today, down 7%. Even though the permits were up, that was such a big miss. The upward permits numbers really meant nothing. They were up 2.6 with the housing starts being down 7. That wasn't even close to what anyone was looking for. So those are starting to show up as real material events. And then let's go to the Fed and talk about the minutes that came out. I didn't think there'd be much from that, but obviously there's some dissenters. There's some folks that think that the Fed could start to taper this year. Well, what's really interesting, I'm going to cover these markets in detail here shortly, the 10-year actually downticked. If that was the case, why didn't the 10-year uptick? But there's some other flows that are going on, and I talk a lot about sometimes you have to understand the cash flows that are going in the markets, and there's a lot of cross currents at this very moment, including the dollar. So this is going to be a bit longer tonight than normal. Just it's going to take me a while to get through all the setup here. I've got quite a few notes. You can't see them. I know it's whited out, but there's quite a few here that I need to talk about. And, you know, like I said, I just want to go back and discuss some of these events, international events that are happening. I think that's going to play out really big. I think market sentiment is going to turn for the short term. I still see some things, just to kind of summarize a little bit. I still see some positives on the intermediate term, but there is growing some potential. And one of the things I'll go through in detail, but I just want to make some general comments here before getting into it. I've been talking about this inability for our database to get any traction. It's been flashing back and forth from around 35% bullish to up to about 45, and it's just flipping back and forth. It just can't get any traction. And I talked to you about how narrow the short-term environment is, and I think we're going to see some narrowing when we come in tomorrow night's video. I'll talk about that we're going to see some narrowing there as well, unless we get some miraculous move back to the upside tomorrow that no one's actually looking for. But we'll see how all that plays out. I'll get that in the technicals here in a minute. But the comments or the folks that we're talking about the taper, I don't think that's going to happen. Especially these minutes were done. They were read. They came out today before the housing starts, before the retail sales, although the Fed knows these numbers long before we see them. Okay, they didn't just pop up today. The Fed has access to the numbers as soon as they're available. So they saw this weakness. In spite of that, folks are still looking forward. And what have I been telling you for probably a couple months now? That as we come into the fourth quarter, I see us starting to maybe weaken on the unemployment going up about 1%, as much back into maybe close to maybe 6.2 even, something like that. That's likely to happen, maybe as high as 6.8. So I think we're going to see those events happen, and that's going to be interesting. But the only way that's going to happen is we're going to have to see the economy slow up a little bit. Now, I saw the stories in the mainstream media that I was just kind of looking through and seeing what these folks were saying, and I don't even know where to stay, but there were a number of stories talking about the Delta variant and New Zealand. They had one case, so they're going to lock down, and that was the reason. It was not the reason for the sell-off today. It has nothing to do with Delta or any of that, I believe. There are much bigger things going on that are starting to merge very quickly. I put you back and focus you in on Afghanistan and some of the international scuttlebutt was going on. And I have some very traditional European liberal type friends, and I can tell you they're freaked out. So I know there's some things that are going on there just in the market sentiment, okay? And so what my expectation is that we're going to see continuing deterioration here. Tomorrow we have claims coming out. There's a couple of things coming out tomorrow. So let's move on and talk a little bit about the setup. The claims are expected to come in at 370. They've been improving the last several weeks. Maybe that will continue to happen. We'll see if if it comes in over maybe 425 tomorrow. That's not going to be received well. But what is that really going to tell us? That's really going to tell us that the Fed's not going to taper at all, right? So I think there's going to be some stability, especially if these numbers over the next couple of days come in a little weaker than expected. Continuing claims are down at 2.86 last week. We'll see how those come in. If everything starts to uptick a little bit, you can take away some of the effects of comments on the Fed actually tapering at all. That's going to disappear as fast as it showed up, especially, as I mentioned a minute ago, looking at the activity in the treasuries, right? That doesn't map out. If we're going to taper, why did the treasuries downtick and all of that? Like I said, I'm going to cover all these markets. It's going to be a little longer stream. I try to do some individual stocks on Wednesday night. We'll see what we have time for. I've got a little bit of a limitation. We're into this about 15 minutes or 10 minutes right now with the live. So I'll do my best to do the better part of 45 minutes to an hour and go through a lot of this stuff. There's just a lot changing very quickly. So let's talk a little more about the database, and then I'll bring that up next, and we'll start there. And I'm going to probably be jumping around a little bit more tonight than usual. There's a lot of notes I have. I'm going to have to play out some things, and so please just be patient as I start to get through this stuff. Yeah, and Nelson, I did say I didn't see the market going down, and right now, if you want to call 0.84 or 1% going down, good for you, brother. So I'm not going to look at these comments anymore. I still don't see it going down a lot, and we'll talk about it, and I'll explain all of this stuff. And if the whole point of this channel, by the way, is to support our software users, and everybody that uses software already knows we've already raised cash on a short-term basis, so we've already changed our profile substantially. And on an intermediate basis, I think we're going to see that happen as well as we come into the week. So let's go ahead and take a quick look at the database, because I think that's going to tell us a lot going on. So looking here, this was somewhat shocking to me, but we got 4,045 sell signals. That's a lot of sell signals. 254 buys, so there was a 40-to-2 sell versus buy ratio here. Database was way up at 45% yesterday. We are at 27. Now this is something I want to discuss in detail here, and it's interesting to understand is when you start to, I've talked about a lot, if you just look at an index, did that index go up or that whatever, that's a very narrow view of the world. And what I look at, we have 347,000 stocks, ETFs, mutual funds, bonds, all that stuff that we're monitoring. And I've been talking about the narrow part of this database. It continues to be even more narrow. In fact, it's what I'm expecting to see here is a potential mass liquidation. And this goes to the title of this video. And the mass liquidation is going to be on a short-term basis, which is going to suggest that we're going to see more downside. I'll discuss where some of the targets are. And there will also be more trendless environment that we're going to be operating in. And I've actually talked to you about, I can't remember all these videos and doing daily streams, everything kind of runs together. So what I'm seeing on an intermediate basis, I'll go into more detail tomorrow night when it comes to the database. But down to 27%, this is a very key level, this number exactly. And it's interesting that we just flipped the script in one day. And not only one day, but in 90 minutes. I'm going to show you some things on, I believe I have some 30-minute or 60-minute charts we're going to look at on the indices intraday. And that we'll be reviewing as well, because you can see exactly where this flip happened. Prior to the last 90 minutes, the markets looked fine. In fact, they were, in the first couple hours, they came in lower. They were printing up toward their highs. Fed meeting came out, minutes came out, and that was all that's all she wrote. As market participants started to go, they started to wonder if they should stay in the market. They obviously made a lot of liquidation decisions there. The other thing I'll just mention right now while I'm thinking about it is that we saw very low volume. And let me tell you, that is one part of this sell-off that is scary. When you see sell-off like this on low volume, tomorrow's going to be really important to see if we can bounce back. Like I said, right now we have some positive on the futures at the moment, but if we can bounce back, then maybe a lot of this downside risk that you feel when you see this type of sell-off will start to dissipate. But I do believe it's setting up some downside, also some further consolidation as we go forward. But the database itself, we saw a huge negative ratio, and that says something all in itself, that the trends that we're watching right now, we went from, I believe it was about 8,000. Sorry, I don't have the numbers right in front of me right now. My worksheet from last night got actually thrown away earlier today. But we're down to 4,523 symbols long right now. So it's narrowed down substantially. So here's the thing about this 27%. If we get below 27, we go into what I call full liquidation mode. If that happens and we see further liquidation in tomorrow night's video when I talk about it coming into the weekend, then a couple things are likely to happen. We're going to move down between 18 and 20%. And what we saw last June, just a little bit over a year ago, we saw a full liquidation all the way down to around 8% bullish. And when we got to that level, that was the point where you needed to start looking to find things to buy. And I'll talk about that if we get down into that liquidation mode. So let's go and look at the technicals here so we can get a feel for what's going on in the actual indexes. And one of the things I feel really bad about what I'm about to show you is oftentimes I don't turn on the short signals on this chart here, and I literally had a sell the open on the NASDAQ this morning. You can see it on screen. Let me blow this up. I'm going to zoom in on it actually, and I'm quite upset that I didn't have this up. You see sell one, it was the open, the actual number that issued to sell. This is NASDAQ was pretty big. It was right at 14,970. So it literally flipped the script there. And I really disappointed. I'm gonna make sure this is on here every night so that we don't have this type of thing happen again. So I'm going to go, and we're going to go as usual, and we're going to go to the S&P here. Let me just switch something over here. And we're going to the S&P cash to start. And I thought it was interesting. This is the hourly graph that I have up here. And we also traded down to the 200-day moving average. Bear with me 1 second, folks. I get a little technical issue going here. Sorry, hang on. So what happened this morning at 9:30, this is Pacific time, right after the open, we got a sell signal at 44.47 on the hourly. The charts have rolled over, and then we got that last hour sell-off. But I do want to point to some downside objectives here that are on the screen. And those objectives on the downside are, and this is the S&P cash, by the way, that we're looking at right now. 43.91 is the min. The next levels below that is 43.68. I'm going to tie all this stuff together here in just a few minutes. But you see all the PPMs on an hourly basis rolling over. Like I said, there was a sell signal early in the session. If we go and look at the daily, you'll see that there's a sell on the daily for the morning to exit this trade here. And so there will probably be a reverse trade where it potentially is going to tell us to go short this market. And the thing I want to caution you about, almost every short we've had in the last, we'll just say in the last 6 months or so, 8 months, have not worked out. And a lot of times what happens, you get this rollover, the PPMs roll over, we get the signal to go short, and the short signals just kind of flatten out. We get 2 or 3 days, and we end up buying them back at a loss. I'm not sure how this one's going to work out. There's not a lot of downward momentum yet. This is still the cash chart that I have up here, but there is some risk as far as that goes for this thing to follow through. But we're just really looking at the charts from the standpoint of what the trends are starting to evolve. When we go over, I'm going to show you a weekly trade now. So we're starting with, usually I do the futures first. We're doing cash first here today. I'm going to go over to the weekly chart, and I just want to show you what this looks like, because this is the intermediate trend. So back in November 20th, there was a buy signal at 3,600. Let's see, make sure I got it right. Yeah, 3,600 on the cash. We're still in that long signal from the stand on an intermediate basis. I do not see that getting triggered out. And when whoever it was talking about, I was saying there's no downside. There is no, I don't think there's a 5 to 7% downside correction coming here. But I do think on this weekly chart that the extreme that I see is down to about 42.64. I don't know what that's probably a 3 or 4%, not a 5 to 7. But we could see this market move down into this range. The one thing that is set up here at the moment, let me go full screen so you can see this a little better. The one thing that is set up here at the moment is the potential for an STX buy signal weekly. And that number is 4411.69. I'll mention this again tomorrow night, but if we close below that, typically what that means is we're going to get some sideways action. The one caution that I want to put out here is I've been talking about this narrowing market grid. And the market grid narrowing usually suggests there's some downside in the market. Been talking about it for a while. Even on Sunday night's video, you could go back and watch that. I was talking about this narrowing, and that suggests there is some risk in these markets right now. And that is limited down to around the 21 period moving average. So let's discuss just for a minute the PPMs here. Now, PPM 1 is actually starting to turn down. PPM 2 and 3 have crossed through their first and second derivatives. So what does that mean? It means that the likelihood right now, if we close below 43.60, is that we're likely to see a continued move potentially down to that 42.64 number, but that number is changing by 20 handles per week. So literally that's going to be 4,300 in 2 weeks. It'll be 42.80 plus this coming week, and when we come into Monday. So the downside's still somewhat limited, and I don't see this being the big turnaround, the big collapse. I do see it actually ending up to be some downward risk, but also looking at it setting up some consolidation down here. And you think about it, there really was no reason for the sell-off. And if some of these numbers come in, like I talked about in the opening comments, if I take a look and let's say they come in with the claims numbers are higher, we start to see some of these metrics that we're seeing, retail sales, housing starts, all that stuff start to continue to show some weakness. That just means flat out that the Fed's not going to take their foot off the pedal and they're not going to taper. And the fact that the people, if you look at who's dissenting on that list, they're the typical folks that already have indicated that, which is fine. They haven't done it. Everybody's anticipating they will do it. That may fade. If I'm correct in what I talked about on the opening, and we start to see more of the deterioration of the economy, and maybe there's some other elements that aren't predictable that come in, the Fed's going to have to keep their foot on the pedal, and we'll see. I think the downside at the moment will be limited. If we see a lot of liquidation in our weekly database, I'll talk about that on Sunday night. If we do see that, then that could bring in some concerns that I don't see at the moment. But from a pure technical viewpoint, looking at these indexes, it looks like there's substantial support down at this extreme level. We'll call it 4280, 4300. There's going to be some numbers down there. I'll be able to update that better on Sunday night once we get the update for the week. So let's take a look real quick. I'm going to go back to the daily chart for a second here. I just want to talk about the market grid, and we'll zoom in on that so we can get the numbers there. The market grid tomorrow is turned down. You'll see here on the screen, it is turned down, and the expectations for that is for the market to probably print down minimum to 43.88. We went out at 4,400. That's 12 handles lower. Not even sure right now. We're seeing a little bit of a bid in the futures, up 350, no big deal. But the extreme probably tomorrow is going to be 43.76 intraday. Probably looking at R1, S2. So let's go to the futures now and just take a quick look at those. That's the cash numbers for tomorrow. The futures, what we're seeing, since the futures are already trading, this is the exit signal I was talking about a minute ago. So we've already signaled an exit on the reopen of the futures tonight. And we've traded almost down to the 40-period moving average, 43.70. That number is going to map out perfect with the numbers I just talked about on the cash. That's going to be your extreme around 43.70. I don't see us getting much below that number in this particular pattern. So we're definitely seeing some rollover here. We're definitely have some weakness coming in, but it doesn't look like it's going to be material, and the numbers I talked about on the cash markets will come into play here. So let's talk about what those are. 43.52 is the 10-period moving average. The PPM1 is up at 0.37, PPM2 0.50, PPM3 0.50. There is right now only, let me get the number right here. There is right now only about a 40% probability, or otherwise 6 times out of 10, it should hold 43.52. So we're going to qualify major support between 43.52, 43.80 in this pattern. So from my viewpoint right now, that's the downside. Like I said, our short-term database has taken a lot of protection right now. We've already done a lot of that. Anybody that is utilizing the software in the portfolio strategy knows that what we really have right now is we've been liquidating for actually a number of weeks ago. We went from around 60 some odd percent down to 35, back to 45. Now here we are at 27. So we're definitely seeing that type of protection taken in these strategies, and that's likely to continue. Tomorrow's going to be a very interesting day to see if there's any conviction on the selling that we saw in the last hour and a half, and we'll see. NASDAQ's up 21 right now, the S&P up 375, so not a lot going on, up 0.14 there. Let me just see, Russell's up 0.19, up two handles on the futures right now. So not a lot there. So let's go from the S&P. We're going to go back to NASDAQ. I touched on that for just a little bit, but let's start taking a look at NASDAQ, and I'm going to go to the daily chart first. I know we're still in these indexes. This is not supposed to be, 2.5 hour live stream, but there's a lot of context that I want to set up here, and there's a number of markets to go through. Once I get through NASDAQ, we'll talk about the Russell. We're going to go through the 10-year, the dollar, and then we'll get into gold, and I'll probably do Bitcoin, and that we'll see where we are in the broadcast. We're about 30 minutes in right now. So NASDAQ, as I mentioned, is up 24. Now it's up 24.75. We're hanging right around the 40-period moving average, and that is right at where The support line is going to be there's not a lot of upward momentum here. I've been talking about that for several days, that the market has been drifting lower. It's been losing a lot of momentum. And as everything right now, the support, the trends that are important right now, the dominant trends, are going to be found on the weekly charts. So let's take a quick look at the market grid before we move on to the weekly. The market grid for today, we've had a low of 14,835. We're just above S1, actually R1 14,903. We're in between R1, S1. I would expect to potentially see a move back into the moving average range between the 40 and the 21. So I can see an S1 R2 on this market. Like I said, if it takes out 14,795, then you're going to continue down toward some of the lower levels in the market grid. There's one other thing that's here that I want to bring up on the daily NASDAQ. It is got some downward objectives here, 14,621, 14,4 on the downside, but 14,621 probably going to be about the end of it. I'll show you something on the weekly chart that I looked at earlier that I think will be important. So let's go to that right now. So from a weekly standpoint right now, our STX is 14,826. We actually traded under the STX extreme for this week. That's going to be fairly substantial support. We also have the 10-period moving average at 14,771, and that PPM1 is at a 0.60, 0.65, and 0.55. So that tells you there's only literally a 30% probability for us to close under 14,771 on Friday. If we do close below that level, then I would still look for a reversal, because that would also give us an STX buy signal. I believe we'll stay above this level. With a 0.60, it's pretty solid number right there. Even though we're starting to see the PPMs turn south, take out their first and second derivative, it's still in that mode. We've seen this before happen back in March earlier this year in these couple of dips. It actually happened again in May for a minute, and now here we are. And these, if you look at this chart just in general, you're seeing the stair-stepping pattern higher. As I've talked to you a lot about, that upward slope is still valid, and it's likely to continue along that line. And that number is going to be the magic number there, is at 14,771. The probabilities of getting down to 14.2 are very low. And so just continue to, continue to expect to see this thing just climb along this line. Next market we'll look at is Russell. Russell, as I talked about, is continuing to move along a support line, the 40-week moving average, 2179. We got a low of 2152. We actually closed just a bit above that. I'm sorry, a bit below that. And that's wrong. Yeah. So we're looking at that range here. I'll get this right. The 10-period moving average, 2238. So we're below that now, but we're also looking at SDX 2161. We're just right at that number right now. So we could actually get an STX buy signal. This is weekly Russell. Okay. These PPMs are not necessarily very bullish by any means. There's still a lot of downward pressure. The major resistance now 22.38. That number's moved down. I talked about 22.50, 22.54, 22.58. Sorry, I'm losing my voice. It's trying to break up on me. But this is most likely, like I said, going to get sandwiched between the 10 and the 40, 21.79. We should see a rebound back into that range. Not a lot going on there right now where, like I said, the futures are up $2.30 right now. So there's a little bit of a bid in these markets across the board, but that's about it. So let's go to the spreads next. Take a look at that. I mentioned in my opening comments that the S&P has been the strongest market here. This is the chart far to the left. That has been the strongest. It's been outperforming the NASDAQ. The Russell has equaled its low in this pattern from the spread standpoint. The pairs, this is long Russell, short NASDAQ, and you can see it's not working well. And we're seeing the same thing on, this is the cash indexes over here, but this is giving us a pretty good feel here. This is actually, the chart on the far right is the mid caps versus the NASDAQ. So they've fared a little better than what the small caps have. All right, so let's get into some other markets here. So we'll start off with the 10-year, and the 10-year continues to work along this line. The PPM1 has a substantial downtrend, and now PPM2 above it is also down. So this is going to be probably one of the more critical levels on the charts. And possibly, if my narrative that I'm presenting to you folks is that the economy is going to weaken coming into the fourth quarter, all of that's going to happen, then yields probably aren't going to go higher, and the Fed's not going to taper. So, like I said earlier, if the Fed was going to taper, why is this market rallying? What is the issue with that? Right? That's probably not what's happening. But I still think we're going to stay stable. We're going to look at the daily chart here very quickly, and then we'll also look at the monthly. And I want to show you something that happened today on the 530 spread. That yield curve trade is starting to do something very interesting, and the next couple of days will let us know what the Fed is doing and whether the Fed's going to be buying those fives or not. We'll talk about it in more detail here in a second. But let's go over and take a look at this is the weekly chart. Let's go take a look at the monthly chart, and I think this has the bigger picture on it. There's major support. I talked about this before. I'll bring that up. Major support at 1.10, and right now the resistance 1.32. So I still think we're going to stay in those levels. We did print down. If we look at last month's low, if you recall, we printed down to 1.128, basically 1.13. That's going to be your really key level. We're a fair amount above that. These are bonds. So when you're looking at the bond market, you're going to get, this market is so many times bigger, especially sovereign bonds like this, bigger than the stock market. These things don't move as much. When they move, like we've seen them over the last couple of months, just coming back in from 140, 150 range back into 1.25 roughly is where we moved. That's a quarter of a point adjustment. That's a big deal to the bond market, especially when you have a $30 trillion deficit, right? So this is big, okay? And these markets are so big, they're going to move a little slower. But this pattern, I'm still very encouraged on this pattern. And what's interesting about this pattern, just to unpack this just a little bit, is that the 10-month moving average is at 1.28. I think on a monthly basis, now we're mid-month, but by the time we get into September or so, markets are going to want to stay between the 1.128, which is interesting. That's exactly what the 21-month moving average is. And then we're going to see probably stay between 1.30, there's that number again, 1.30 and the lows that we printed down at 1.13. So this is likely to stay stable in here. So it's going to be interesting to see what kind of noise comes out of the markets, what kind of metrics I talked about earlier, whether we're going to see any type of activity that is going to tell us what the Fed might do. And I'm going to show you the yield curve next. And I think this will be, at least for me, a place to get tipped off at, okay? So I'll leave both on the screen for the moment. I don't think I need to zero in on them. But the 530 spread actually flattened today, which was interesting. Just basically shows us what I've been expecting is that this would actually steepen. We saw a flattener happen, and when that happens, it tends to lean toward lower rates. I still think the Fed wants to maintain this spread at some level. I've talked about this in detail in the past. I won't go into a lot of detail here, but we're basically looking at the market stabilizing in this level here and potentially starting to see some steepening. And for that steepening to happen, we're going to have to print at least at 1.30 level to get it up there. So this is always a focus for me looking at these spreads. The interesting thing is the 1030s are remaining pretty much right where they need to be. So they're not really moving much. They're maintaining. But the 530 is where I always look for activity from the Fed. All right, so let's move on. I'm going to do my best to get through a lot of markets tonight. I see we're already getting long in the tooth here, so it'll probably be about an hour. I'm going to roll through some of this stuff. I did, just a side comment before I go next, I did notice that lumber was up today after a 7% drop in housing starts. I thought was interesting, but well, really no relevance other than I just noticed it on the screen. All right, so let's go next to the Dow. And it's interesting because the Dow printed up and there's some new, I've got a monthly graph up here right now. And I'm going to stay with this. And I've talked about this before, but for whatever reason, the Dow still looks like it's going to strengthen. There's a lot of resistance where we're trading right now. I'll bring that on screen just so you can see that, and I'll go full screen so you have a little better visibility. But it's interesting that the key levels, 94.04 is a pivot, 95.28. I still expect to see the Dow move up into the 94 handle. And is that going to be able to do that with interest rates lower? I don't think so. So I think we're just going to see a stabilization. The flows into the Dow will be whatever it's going to be. But it's not really being right now. There's no indication that the treasuries have to go up to get the Dow to go up. Today's a good example from that standpoint. Let me go over to a weekly chart just quickly. Weekly is trading right at the extremes. There's a couple of numbers I want to point out here. We do have some upward objectives that confirm what I just said here. The high target 93.30, which is right where we're trading. That's the minimum target in this pattern. 94.75 and then 95.62. That's on an intermediate basis. So we're going to continue along this line. I'm going to go to crude oil next. Crude oil, this is a weekly chart on crude. Crude is actually showing us that we've got a fair amount of support. I discussed, I believe, the other night, not sure when I covered this last, but it was a couple nights ago. 60-70 is going to be major support. We're also seeing the 40-week moving average and the 200-week moving average converging, and the 40-week, it looks like it's going to cross to the upside. So we should see substantial amount of support around $60. Now we're at 64. Definitely some pressure coming in this market, and mostly that's probably in the expectations of some weakness in the economy coming in. Maybe even though OPEC and Russia said they weren't going to increase and turn on the spigot, maybe they are anyway. And I believe there was a big drawdown. I saw the numbers, and you can correct me if I'm wrong, but I believe there was a drawdown in stocks today. So we'll see how this all plays out. But on a weekly basis, that's going to be your big pivot number at that 60-70 level. And if we hold that level, we should start to see it come back in. My overall expectations for crude oil is for us, the overall expectations are just for us to remain ultimately between 60 and around 71. I've talked about this a lot. I think we'll stabilize here. I don't think there's going to be a collapse in oil prices by any means, but maybe, like I said, maybe Russia and OPEC will turn on the spigot a little bit, and maybe prices will come under some pressure. It looks to me that we're at the point when we look at the ppm2, ppm3, that actually is tracking, and actually even going down to the WaveTech 200 indicator, that is telling us that the support at that 60-70 level should be very substantial from that standpoint. Okay, so the next place we'll go is to gold. Let me flip over to a daily chart. I've discussed this quite a bit over the last several days. That this gold chart is just setting up a very bullish pattern. Well, it continues to evolve. If we go back just, I think, 5 or 6 days ago, we had ppm1 at a minus 0.47, and going back we had ppm2 at minus 0.20, and I told you that my expectation would be that some sort of bottoming pattern would set up here, and we'd start to see this move up, and we're right at the resistance. You can see the resistance that I talked about was the 21 and the 40 period moving averages that are just above there, 1792, 1795. We look at the highs. We printed 97 a couple of days ago. Yesterday we printed 95 right on the number. So far today we've only got a 90 high. But if we can get a close over this 95 level, you're going to see this market start to move toward the 200-day moving average, which is at the 1823. That's going to be your next pivot point. And then there's a number of resistance points around 1830, 1834. So this pattern does look like it's evolving, and it does look bullish. So the question that I always propose, well, if the Dow looks like it's going to 94, 95 handle, how is gold going to go up? And it actually has, other than that, if we didn't have that flash crash on Sunday night a week ago, we would not have seen, I don't think we would have ever gotten to that point. There supposedly was a big seller in Asia. It rebounded immediately from there, and it was a very illiquid market. This is just some things that I've been able to dig up on that action. But we came right back, patterns right back in. And in fact, if I go over to a weekly chart here, when we look at the weekly, what we saw there was a big reversal where you get this big spike reversal. So the critical thing just to talk about coming into the end of the week on gold is, for my preference, I would like to see a close above 1778. So we could close right where we are right now, and I would be happy that we had a follow through higher close on Friday on a weekly basis. The PPMs are still pretty negative, so we're not likely to get out of harm's way, but just looking at the PPMs, as I look at the PPMs here on the weekly basis, it's interesting that PPM 3 is turning up through its first derivative. PPM 2 is already above it. It's actually positive. So there's a lot of draw toward this market moving up to around 1800, maybe 1820 range. And I still think there's a fair amount of consolidation to go on here before we're going to get to any type of move higher. It's interesting that there was some projections up around 2087. I remember talking about that a number of weeks ago, and that's still in play, but there's a lot of work to do before we're going to have this market in position to make that happen. So here's the plan, folks. We're at 57 minutes since I started the stream. We're about 52 minutes. I'm going to go through Bitcoin and Ether, and we're going to call it quits. And here's the other plan. The other plan is, depending on what happens tomorrow, I might do a live stream. I'm really disappointed I didn't have time to do a live. It would have been awesome to do a live stream today when the breakdown was happening, have a real-time analysis of what was going on there. But if I will come live if anything weird happens and markets are coming under pressure or any type of thing. But like I said, I set this up pretty good, so I'll keep in context what I've got going there. So let's do the last two markets, Bitcoin and Ether. I'll come back on screen for a few minutes. Unfortunately, I won't be able to do any individual stocks like we usually do on Wednesday night. It's just not going to happen. This is a unique situation. I was also thinking about something. I'm going to propose this out to the channel right now. We've got several hundred people on. So what would you folks think maybe about having just a special live stream or some special report that I did, and maybe it's 30 minutes. I don't know. I'm just putting this out there. I don't want to put, I have somewhat a limited time right now in my schedule, but maybe doing where we focus on individual stocks. If you think that's a good idea, I know a lot of you probably will. It would be nice not to have the distractions of all the index analysis and all that, and just dig into some stocks. And I would have a pre-prepared number of stocks that I would do, and it would be set. I wouldn't be total interactive, but let me know what you think about that. All right, so let's go in and take a look at Bitcoin. So this is a weekly Bitcoin chart. And we continue to remain above what I believe to be a key area, 43,643. The low has been 44,416. So we traded down there intra-week. We also have the S2 number, 44,375, low 44,224. So reasonably accurate there. We should have support right around here. We're seeing a little bit of an uptick right now, 45,181. We look at, this is a weekly chart, so we look at the range this week. We've had 47,725. R1 was 48,7, we'll call it 48,8. S2, 44,375. So we've kind of basically tried to print an R1 S2 number, and I think that's probably about all we're going to see, but the PPM 1 is very positive. So the major support is at 38 400. I'll just round it up. That's major support in this pattern. There's also support right around 40,600. That is something, another area to watch. If we go to a short term just for a second, we'll see that we're trading back to the 200-day moving average. The PPMs across the board are in trend mode on Bitcoin on a short-term level. So even though we pulled back into that 200-day, the 21-day moving average 42,562 is going to be a key level there. And the only thing I can say is that we are seeing a bit of a rollover on the PPMs. So possibly if we can hold that 42 number that goes in line with what I talked about on the weekly charts, that we could set up a trading range between 42 and 46, something like that, just rounding numbers off. So we'll start with the daily Ether. And as you folks know, Ether has been relatively stronger than Bitcoin, and it's flattened out a little bit, but here's the range. This is the daily 27.22, we'll call it 27.25 is going to be your major support, and there is going to be some resistance right now, right where we're trading at 30.98. If we get above that number, then we're going to see this market grid turn up a little bit and the PPMs potentially stabilize. They're all three in Ether on a daily basis, very much in an upward trend. I talked to you about that level angle of attack that goes on. That's all here. So if you saw 27.22, that would be a really big number. Now that number is changing every day by about $40 per day. So all of a sudden 27.22 is 27.60, 2800. You get the pattern. Take a quick look at the weekly. Weekly pattern is starting to trade back toward the lower end of the range. Low 29.51, S3 29.72, STX 28.77. So that is also on an intermediate basis is going to be your support. But once again, and I'll just come back on this. Once again, the trends are off the map strong on Ether relative to Bitcoin. This is still the best coin out there from a trending viewpoint. So I do see us finding support. We're right there. Major supports way down at 25.14, 23.85. I don't see those numbers in play. We should probably try to bottom out here at the STX number. Okay. Yeah, so we made it right about an hour of actual time. Sorry we're not going to get through those doing some individual stocks. I didn't want to cover a number of them, but I've actually got a time constraint, and so I'm going to have to take off from here. But just know that, like I told you a few minutes ago, if anything big is going on, I will have some opportunity tomorrow to light the screen up. It's somewhat limited, but if it's really coming apart, I'll see what's going on. I don't expect that to happen. I expect this moderate strength and stabilization to happen tomorrow. But we'll continue to watch. Like I said, we've got a couple of numbers coming out. Just to mention that one more time, is we do have the claims coming out and the continuing claims, 370,000 expected new claims, and we'll see if that goes up. Like I said earlier, if it goes up over 425, I think what that's going to send a message that forget the taper, right? That I think that if that is what triggered this selling after the Fed today, it's probably not going to be long-lived. We'll see what plays out. Thanks again, as always, participating in the channel, and I really appreciate everybody's participation. Haven't had a chance to look at any of the comments, but appreciate it. Everybody's participation. Thanks again. Have a great evening. I will talk to you folks tomorrow night.